let's talk alternative lending, because why is this something you want to talk about? Why is this important right now?
I think it's a little bit, like the future. Todd, as housing becomes more expensive, as there's a stress test, and the banks only have a certain tolerance in terms of what they will allow, in terms of debt servicing, credit, income, stuff like this.
Yeah.
Alternative lenders will lend to people at a higher debt servicing ratio. And they'll lend to people that might have had, some credit issues in the past.
Mm-hmm.
They will also lend to people who are self-employed that might not have enough income on their income tax to qualify. They're more of a make sense lender. And, the real estate is the biggest piece that they're really worried about. Alternative lenders will lend up to 80% of the purchase price, or in a refinance situation, they'll lend up to 80% of the market value of the home. The big difference between an alternative lender and a prime lender is the rates and the fees. Typically, an alternative lender is going to charge you between 1% and 2% for a setup fee. Mm-hmm. And also, their rates are closer to where the posted rate would be. So right now, the posted rate with most lenders is somewhere around 5%. 5.25 is what we qualify most transactions on a stress test. And that's usually where these alternative lenders are sitting. Some are a little bit higher, some are a little bit lower. It's based on the amount of risk that you're going to, obviously give to the lender. But they certainly will dig deep. So for example, we could have someone that has very good credit, but maybe the ratios are way out of whack. Maybe there's income in their household, and we can, give a really good explanation about why they can afford this. Like, for example, maybe somebody has some contributory income. The person's not on the mortgage, they're not on the deed, but they're living at the house, and, we can help justify that, and they'll take income sources like that. Also, if they're self-employed, sometimes we'll, give 3 months, 6 months, a year's worth of bank statements, and we can do a stated income declaration type letter, which could show their sales and what they think the expenses are and what the net income is. And that does not take into account their income tax. And that's typically what we look at for a self-employed individual.
Is this regulated?
It is regulated. They still have to, fit obviously within a box.
Yeah.
They do a bucket of mortgages, I will call them, that are non-conforming. But the majority of the transactions that they do need to conform within B20, B21. But they are able to take a higher risk than the bank can take.
So the bank under federal law has more parameters than they would have,
and really even risk tolerance.
Yeah, sure.
Both. Yeah. It's not just B20 and B21, but it is the risk tolerance that obviously the bank is willing to take on. These lenders will take on a higher risk tolerance in terms of
why is that?
Because they're charging a higher rate and a higher fee.
Yeah.
And typically these lenders can have more losses, Todd. Yeah. So they could have more foreclosures. They could lose more money because they're charging a higher rate. Yeah. And that's really what they're betting on. Usually Canadians pay their mortgages, but not everyone does. Yeah. People come into hardship. Maybe they've had a loss of a job. Maybe they've had some health issues. Maybe they've gone through a matrimonial breakdown. There's a variety of reasons that people kind of run into financial challenges, over the years. And alternative lenders are there when you need them. Yeah. In our market, we have 4 or 5 alternative lenders that are very aggressive. Obviously, they love the properties that are on city services. That's usually their biggest appetite. Yep. And I'm not saying they absolutely will not lend on more rural areas, on more rural properties, but sometimes they want more skin in the game. Maybe they'll only go to 75% of the property value, or 65%, or 50%, depending on, really what the risk is. Because really the security is very important to them. If they are taking more risk on you, you have a higher chance of a loss, i.e. a foreclosure. Mm-hmm. They need to have, a better, security that if they have to take it back, they want to know that they can sell it.
They still have right of first refusal though on the property, do they not? Mm-hmm. Yeah. How does that work?
If there was a loss, they would, foreclose just like any other lender would. It would be the same type of situation.
Yeah.
No lenders want to foreclose on a consumer. No lenders want to. They don't make money doing it.
No.
Their goal is to recover their capital when they do something like that. And, in a very good, seller's market, consumers typically have no problem selling their home if they come into financial challenges. I can tell you, Todd, we have over 10,000 clients. I get calls all the time when people run into some financial hardship and they ask me, Clinton, like, what should I do? I'm like, sometimes we can do some private lending. Sometimes we can do some alternative lending. And sometimes we can put a Band-Aid on the situation, maybe just like give them time to sell the home. Mm-hmm. But what I tell people, I'm like, if there's no exit strategy, there is nothing that is not more honorable than selling your home to right your financial situation. You can always buy another property.
How often does that happen?
I think it happens from time to time.
Yeah.
And I think in this market here, at least in Halifax and Atlantic Canada, a lot of people that were in precarious financial position, one, have either refinanced because they have a lot of equity and they've bettered their situation, or they've taken this opportunity to capitalize on what's going on with the market and they've exited and sold their real estate. And I think in a lot of cases, some of this real estate has been sold and paved the way for first-time homebuyers to become homeowners.
All right, so quickly, almost out of time, some quick advice, 30 seconds for people in the spring market.
I think get pre-approved, know what your maximum that you can afford is, and figure out, what are you comfortable with? I think that's really important. I think once you have your pre-approval, you need to have a really, really good realtor. This is the biggest purchase of your life. The mortgage is the biggest debt. Typically, the mortgage piece is the easiest piece. Mm-hmm. This is what we do every single day. I think finding the home, getting an accepted offer is very challenging. It doesn't matter if there's more inventory or not more inventory. I think that is tough. I think a lot of first-time home buyers are getting fatigued because I know there's some that have made like 20 offers on properties.
Right.
Stay in the game, get a good realtor, get an accepted offer, and seek the advice of an unbiased mortgage professional.
If people want to know how to get a hold of you, what's the best way?
Check us out online at teamclinton.ca/radio. That's our website. There's links to our social media. There's over 500 blog posts on there, lots of great information. There's information on rates, our contact information. And, if you want us to talk about anything on our next show, send us a message, send Todd a tweet, me a tweet, and we'd love to talk about it on the air. Next Bank of Canada meeting is June 1st, and we'll be on the air in Halifax talking about that as well.
Always a pleasure, Clinton. Thanks so much.
Thanks for having me.
That's Clinton Wilkins, myself, Todd Veinotte. That's Mortgage 101, your guide to home ownership. We'll be back next month.